Welcome back. You're watching NSE Closing Bell on CNBC TV 18. Yes, another day where we felt a little bit of pressure. You've seen that dip come in of profit booking, possibly routine profit booking as we see on every Friday of every week. Still above a lot of key support zones at the 5200 mark. So nothing to worry about, but it's been 3 days of consolidation. All the fun and games has been in much of the smaller stocks really, the sub 1000 crore category. You've seen the mid-cap space now inch marginally into red territory and the Nifty just below that 50 sure, but still clutching on to that 5244 mark. Mid-cap space now down about 0.2%. The interesting thing is that we are still in favor of the advances about 1.2:1. So you can see that pretty reflected. Breadth is not falling off a cliff, but you have your indices coming for a bit of pressure. So that's pretty evident that the smaller, lower market cap, lower weighted stocks are what are moving up, and that's what's kept your breadth still in marginally green territory despite some heavy profit booking in some of the bigger guys. Varun Goel, AVP of Fund Management at KC Securities, now also joins in to talk about trade. Varun, are we entering earnings season with a fully priced market, or are there still some opportunities left?
I think the markets have run up very significantly since the lows of March. I think if you look at the valuations, we are trading close to 19 times FY10 earnings and around 16 to 17 times FY11 earnings. So I don't think there's a lot of upside which is there to be seen, especially in large cap stocks. Having said that, the global equity markets continue to move up. We are seeing a very strong set of GDP numbers and other macroeconomic data coming out of US, and there is, of course, the liquidity still continues to be there. So I think global technical factors still continue to be supportive, but I think Q3 earnings will really have to surprise on the positive for markets to sustain at these levels.
Varun, going into the first of all, afternoon to you. Going into the earnings season, what is that one space that you're most bullish on right now? Because this time the earnings season is expected to do well. Most of the sectors are expected to do well. If you have that one space that you would advise at this point, which one would it be?
I think the construction companies and the infrastructure mid-cap companies should continue to do very well. I would say that we are going to see a 25 to 30% kind of sales growth coming in. That will be accompanied by expansion in margins. I think the incremental order book situation is definitely going to improve for all construction companies going into this year. I think last year the growth has been primarily led by consumption, and I think going into this year the infrastructure and capex segment is going to play catch up. So I think we are quite positive on construction companies, especially on BOT road players, because their the revenues and the profits are significantly leveraged to traffic growth, which I think is going to surprise on the positive.
Rajan, a space you really like, tire. Are there still some opportunities in CEAT and MRF?
Yes, certainly. CEAT, since I've recommended it on Bullseye, I would rather talk about MRF.
Stocks from
strategies in trade today. Firstly, we have Varun. Okay, we'll give you those closing strategies in just a little bit right now. We covered a little bit for the markets right now. 5250 is where we position the mid-cap space, 7617, so just down about 0.1%. So you see that sporadic profit booking coming in at around 2.30 every day. Then in the last 15 odd minutes, some of the shorts covered up, and there is still some last minute buying for the next day's opening. So it's good to see some bit of support, and we're not really falling off a cliff. These are just quiet consolidated markets. Varun, what's your sense on all these metal stocks currently? Because you first saw that rally in resource stocks, that was followed by steel stocks. Now it's on to the base metals. Nalco had that sporadic up move 3 days back. Today you're seeing copper stocks like Hindustan Copper move up. Is this a space that you would venture into currently, or is it slightly risky at these levels with a lot of inventory levels for these base metals still being pretty high?
I think the whole commodity complex seemed to have moved up quite significantly in last few days. I think the movement started with the huge spike in crude oil prices, and all the metals have followed that. It is difficult to justify this kind of price movement purely in basis of supply-demand movement. I think there is a lot of liquidity chasing around these commodities, and I would typically tend to stay away from these commodities at this point of time. The only thing which looks attractive relatively is steel. We've seen a very significant demand upturn as far as domestic steel industry is concerned. There is a lot of demand coming in from consumer durables, automobile space, and we would expect the infrastructure demand to also come in this year. So I think except steel, all other commodities appear to be expensive.
Mitesh, what?
Our Q3 numbers, we only have the initial net profit number. Doesn't look too bad there, 136 crores, waiting for some of those comparables to come up. But this is the first of one of the big numbers that have been coming out. Remember, Motilal Oswal came out a little while earlier. All right, 136 crores versus 104 crores, a 36% jump in the bottom line. So on a year-on-year basis, there seems to be some bit of improvement on the net profit front. Still want to see what the top line's up to in IFCI. But nonetheless, this looks like an okay set of numbers. Was expected to be a slightly better quarter. Last year, of course, was extremely dismal for IFCI as a whole. So you've got a bit of a base effect play as well. Income from operations there, 385 crores versus 353 crores. So you've seen about a 30 crore or about an 8 to 10% bump up on the top line as well. Not looking too bad there. Net profit, 36% up move on IFCI, and you're seeing the top line react well. Of course, a lot of this has been factored in, so you're seeing the stock price trade pretty flat right now, still down about 1.2%. Rajan, is IFCI a stock you track?
No, Anicha, very frankly, I don't fancy this stock. Every year we have this news that government would be strategically selling off this company, but nothing happens. Maybe this year it would happen because the government is really serious about selling this company. But I think I would certainly avoid this stock at this levels of 57, 58.
With the core story, it's been a debt-laden company. Now this whole talk of a turnaround, going back into lending.
Absolutely, Anicha, but somehow there are so many opportunities in small and mid cap that this doesn't fall into my list of stocks.
And there you have the culprit on the bottom line, actually a good culprit at that. 101 crores versus 18 crores is the exceptional gain. Still need to figure out what this exceptional gain is, but which is why I'm not seeing the stock react. So net, you remove this exceptional gain and put it at even keel. We're possibly seeing a degrowth in its bottom line. So APAT numbers do not look good for IFCI, which is why it's still down about 1.3%. Exceptional gains, of course, being the key reason why this stock is up at 101 crores is your exceptional gain versus 18 odd crores. So that's the first of IFCI. You can see that the exceptional gains helped it a lot. Mitesh, one chart check for you at this point in time. IRB Infra, that's seen a tremendous surge. Of course, it's been backed by a lot of strong orders over the past couple of weeks, and road sector continues to work well for this. But on the chart basis, how does IRB Infra look at 264?
Well, Anisha, very clearly another stock, which basically was having a very good uptrend, went into some kind of sideways correction. We saw the stock price decline and test levels of around 225, levels of around 235, which was also the 89-day moving average. I think from there we have seen the action come back into the stock. These are good stocks. I think the theme for the short-term traders or momentum traders could be stocks, which have gone into sideways consolidation and have broken out with excellent volumes. I think we have seen that happening in Educom, Punj Lloyd. I think a similar kind of a story IRB over here. Excellent volumes today. Good price action. I think 277 is the 52-week high. I am definitely looking forward for the stock to break above that levels and probably test levels of 294.
Right, the first of the big numbers, IFCI, is out. Varun, what are you penciling in for some of these banks going into earnings season? And from that space, would you recommend anything to go with?
I think we had a very muted credit growth for last 7-8 months of this fiscal. I think going forward things should improve on the lending side. I think so far infrastructure capex had not really picked up, although the loans were sanctioned but the disbursal clearly had not happened. So going forward, I think things should definitely improve for the banking industry as a whole. The asset quality should improve with NPLs coming down. Although I think for this quarter the year-on-year numbers might not look that good because last year there was a significant gains on the bond portfolio, but I think for medium to long-term investors there is quite a lot of value in this space.
IFCI is still taking it on the chin right now. It's down about 2.7% as well, 2.6% at this point in time. If you look at the APAT numbers, it's actually about a 50% decline. So Rajan's prognosis has held true. So it's about 36 crores on the APAT versus about 82 crores, removing all these exceptional items. So not a great set of numbers, and you can see the stock's now down about 3.3% once that exceptional number got flashed on the screen. But of course, just about a couple of minutes to go to the close of trade. So here's some interesting market closing strategies. Anuj of IIFL recommends shorting the Nifty if it is below 5240. Her target is 5180. Her disclosure is that she has recommended this strategy to her clients.
Siddharth Bhamre of Angel Broking advises going short on GE Shipping in the range of 305 to 307 rupees per share with a stop loss of 280 to 285 and a target price of 315 to 317 per share. He also advises a hold on short positions in the Bank Nifty.
All right, let's quickly recap what really happened.